Warren Buffett, the 3 times when you should sell a stock. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Warren Buffett. One of the most famous quotes by the Oracle of Omaha, Warren Buffett, is about the expectations from stock and holding. Warren Buffett, a 92-year-old real-time world-famous investor and owner of Berkshire Hathaway, has some insights to offer and guide your holdings buying and selling. Why don't we dive into the mentality of this stock genius and find out 3 practical instances when you should sell your stock? Theoretically, investing can only be profitable if it is done at the right time and in the right stock. As much as it is easy to buy the stock, it is equally difficult to decide when to make a sale. If the sale is made too early and the stock goes high, you will regret it. But if it is not made in time, you will lose a load of revenue. So when is the right time to make a sale? Is there even a right time? Is it when the prices fall and the graph moves? Or should it be done if the graph refuses to move at all, which means it has been stagnant for a very long time and earns the investor not so much money? Maybe all of these scenarios are wrong. Let us understand this the Warren Buffett style. In one of his interviews, the Oracle of Omaha mentioned that an investor must never be too worried about what he paid for a stock. He was on to explain this with an example. If a stock is valued at 50, then someone who paid 100 for it would be upset. But for someone who paid just 10, this stock would count as a success. But in either case, the stock is unbothered by the decisions made by investors. It either moves up, down, or sideways, irrespective of what has been paid for it. So the decision to sell it shouldn't depend on the movement either. Then, what should? The first reason to sell a stock is when something better comes up. Warren Buffett is of the opinion that for the first few years, the investor must be on the outlook for better and bigger opportunities, and to grab them in time, he should make a sale and use that money to buy something new. Let us understand this concept with opportunity cost. If you invest in a company, then you cannot use the same money to invest in another company. The cost of disinvesting in the first company must be compensated by the advantages of investing in the other company. So, in the words of the great investor Buffett, one must sell only when there is something else he is dying to buy. Sometimes it might mean that an investor might have to give up a company he likes for an even more terrific company. At several Berkshire Hathaway meetings, Buffett has been found speaking about the reason to sell. Back in 2018, Berkshire sold off McDonald's and Disney stock after only holding them for a very short period. This was opposing their common practice, but Buffett commented, "We would sell if we needed money for something else. I would reluctantly sell something terribly cheap to buy something even cheaper," said Buffett. It is invariably notable that just because stock prices increase sharply, or if most of the stock is being sold off, it does not mean that you have to make a sale too. Never rely on others' predictions of the future. Warren Buffett says that forecasting tells more about the forecaster than about the future. Selling should solely be your decision, and this decision must be based on the value obtained from the stock and not the price spent. Warren Buffett employs a value investing strategy based on Benjamin Graham's approach. His investment strategy of self-control, persistence, and value method outperforms the market, and thousands of investors around the world follow his lead. Buffett's objective is to invest in great companies that are trading at a discount to their intrinsic value and hold them for a long time. Berkshire invests only in businesses that Buffett understands and always insists on a safety margin. As of August 2022, Buffett sold 9.1 million General Motors Co. So let us talk about the second reason to sell off stock. Warren Buffett says that a sale can be made if there is a major discouragement with the management or there is a drastic change in the economic characteristics of the business itself. For instance, he sold off major shares of airline companies in the past 2 years because the economic scenario for airlines altered due to the pandemic. Another way to realize that it is time to make a sale is to assess the competitive advantages of a business. Warren Buffett sold off his stake in one of his oldest holdings, the Washington Post. He justified this sale by saying that the Post in today's day and age holds not as much importance or competitive advantage over other holdings of Berkshire. Let us take another big example to analyze Warren Buffett's investment ideology. He bought the first share of TESCO back in 2006. Since then, he has been rather loyal to the business. However, he had been steadily selling off his stake since 2014, and he finally disowned the stock in 2015. Although, he reasoned out his decision by saying that he was fundamentally invested in the former management of the company. As soon as this changed, he decided to cut them loose. In his 50th annual letter to shareholders, he made this comment on the status of his stake in the company. As an attentive investor, I'm embarrassed to report would have sold TESCO shares earlier. I made a big mistake with this investment by dawdling. The best thing about this 92-year-old is that he leads by example, as mentioned before. His functioning and investment pattern have been followed by investors all around the world. He owns up to his mistake, so he commented in 2014 that his leisurely pace in making sales would prove expensive. Additionally, his conduct was labeled as thumb-sucking, which he accepted and continued to keep on delaying the sale. Buffett is a strong believer in the fact that in the world of business, one bad news follows the other. He popularly explains in the following manner. You see a cockroach in your kitchen. As the days go by, you meet his relatives. However, he also believes that selling off businesses on a remote scary bad news is not good and attentive investing. It is worth mentioning that fundamental changes happen very rarely. Finally, let us move to the third reason behind making a sale. This last instance comes from the age-old saying, don't put all your eggs in the same basket. It is advisable to make a sale if one holding becomes too large. The smaller the portfolio, the higher the need for diversifying the holdings. In 1967, his company touched the 40% mark in American Express. He was in charge of managing stocks valued at more than $500 million in today's dollars. The stock was so successful that it eventually made him exceed his 40% limit. Even though American Express was only the fourth largest commitment made by Buffett yet, he decided to let go of the stock and diversify his holding. If you keep focusing on the stock's price, it will lead to bad and unwise investing. Because technically, the stock is not dependent on the investment made by you, so your decision on the sale and purchase of stock must also not depend on how much you paid for it. Before selling stock, this is the question one should ask. If I didn't already own the stock, would I still want to make it mine? If not, then maybe selling it off is the best option. There is a fair difference between not selling off stock and buying more of that stock. This is because buying always gets more brokerage costs and increased interest on the new purchase. If you sell a stock and use it to buy something else, incurs more profits, hence more interest. As famously said, there lies a doing-nothing zone between the sell and buy zone. To recollect our learnings, make a sale only if when something better shows up, when the economic characteristics of a business change drastically, when a single holding gets too big. Please note that our advice is solely research-based and not professional in nature. We request you consult a financial advisor to make decisions according to your portfolio. Finally, let us know if we aided your selling decisions. Comment down your purchase and sale advice, drop a like, and thank you for subscribing to our channel. And hang around for more of Warren Buffett's wisdom videos. See you in the next one. Bye.